Hi, I'm Jeff Lowe, Managing Director of Asian Sky Group. Welcome to Asian Sky Media's Fleet Week. I hope you enjoy the next presentation. For more information on Fleet Week, please go to Asian Sky Media's website, asianskymedia.com, to find all the information you need there. Thanks. Hope you enjoy the presentation. Hi, I'm Jeff Lowe, Managing Director of Asian Sky Group. I'm here today as part of Asian Sky Media's Fleet Week to present to you our 2019 year-end Asia-Pacific Business Jet Fleet Report, and also present to you our first quarter 2020 issue of Asian Sky Quarterly. Asian Sky Media, if you're not familiar with us or are tuning in for the first time, Asian Sky Media is a multimedia company in the Asia-Pacific region as part of the Asian Sky Group. It has a number of industry publications that we publish through the year, and also is an award-winning Best Media Company for 4 years in a row now, and also we're the official media partner of a number of organizations and conferences that occur through the year in the Asia-Pacific region. So when it comes to, if you will, branding and awareness opportunities in the Asia-Pacific region, we are the leader in this category. So the first publication we're going to talk about today is the Business Jet Fleet Report for year-end 2019. This is an annual report that we put out and is always eagerly anticipated by the industry, which gives you a telling of what happened in 2019 regarding the Asia-Pacific business jet fleet. I guess the story to a certain degree is that it wasn't as bad as I thought it was going to be. Initially, I thought for sure this year would swing into the red, but as you see at the year-end 2019, we actually did eke out a small growth, 0.9%, and that came from a plus 11 net aircraft. That was the fifth year, though, in a row now we've experienced declining growth. So you can see that the trend for 2020 is that we would actually finally move into that contraction for the whole Asia-Pacific fleet. The 11 aircraft that we're talking about here, as far as which regions gained and which regions lost, the big winners this year, again, a bit of a surprise, were Oceania and East Asia. I had always expected Southeast Asia would be a contributor. So those two regions were surprises. Not too surprising, the big loser was Greater China. So at the end of 2019, we see that the Greater China fleet represented 40% of the aircraft, Southeast Asia 22%, and so on down the list. If you now look at what was added into these markets and what was deducted from these markets, so the top three markets were Australia, Japan, and Indonesia. And again, much to another bit of a surprise for me, the big additions were in the light jet category, light and very light jets. If you consider the Lears, the Pilatus, Cyrus, and Honda jets, they were a big contributor this year to the growth in the Asia-Pacific fleet. Probably not too surprising when you think that the big loser, if you will, was mainland China, that this was all long-range, large cabin aircraft. That market has always been dominated by this category of aircraft, and so not too surprising, that's where we saw the most deductions. So again, kind of big surprise being that Australia, Japan were the big contributors, and then the aircraft types being very light and light jets. From an OEM standpoint, the big winner, or the continued largest market shareholder in the Asia-Pacific region, was Bombardier. They retained the title of being number one, and they also then grew as well, adding 8 aircraft to their fleet through the year. This year we saw Gulfstream and Textron swap positions, Gulfstream moving up to number 2, and then Textron dropping down to number 3. Between those three, though, Bombardier, Gulfstream, and Textron, you're 80% of the market. So it's a continual battle year after year between those three OEMs for who has the largest market share. We also look at engines in the fleet report, and we'll do so more over the coming years. It's going to be a very interesting market space, given that we've got Pearl engines now, we've got PW800 engines now, we've got the Passport from GE. So this will be a very interesting space to watch as we move forward with a lot of new aircraft coming into the market with new engines. So as I said, what happens over the coming years will be interesting to see. But again, this year, the big winner was Rolls-Royce as far as their growth, and they continue to dominate this market with a 37% market share. The 11 plus aircraft, where did they come from? That is a combination of 45 new aircraft deliveries into the region, plus another 50 pre-owned aircraft additions into the region, but with 84 deductions coming out of the region for a net 11 plus airplanes. If you want to look at aircraft movements, and again here I probably need to explain a little bit how we look at the numbers. We look at the numbers from a number of ways. There's airplanes into and out of the Asia-Pacific region. There are then aircraft that move about within the Asia-Pacific region. And so when we talk about movements, we also include in these numbers retirements, storage, or aircraft that are just relocated out of the region, i.e. An owner moves from Singapore to the West Coast and he takes his airplane with us. We will then also look at things from a transaction standpoint. So again, obviously then storages, retirements are not part of the actual sales and acquisitions. So we look at the fleets really three different ways. One just in and out of APAC, one including movements within APAC, and then from a transactional standpoint. So when you look at it from a movement standpoint, this also includes the inter-APAC movements. You can see, again, this year, 2019, and again, it's one of the surprises for me, we saw a huge reduction in the number of movements of aircraft. 39 airplanes less versus the two previous years, and that resulted in a net contraction of 17%. So a lot less airplanes moving about the region and within the region. The big movers again, as it has been for, I think, for 3 years in a row now, G650, 650ER continue to be the aircraft of choice, new aircraft of choice. Pre-owned edition, if you will, new G650s are coming in. Not too surprising that you're seeing pre-owned G550s moving out. A lot of that being the replacement market. Probably my surprise again on the deduction side, though, a big, if you will, loser from the region, seeing a lot of deductions from the region, was the Falcon 7X. It had always been a strong airplane in the region and has a large fleet, but 2019, if you will, was not necessarily kind to them, with them losing 7 aircraft throughout the region. So now if we take a look at this from a transactional standpoint, so this only includes sales and acquisitions. Obviously, for new aircraft, those are all transactions. But another significant story of the year is that, yes, the number of transactions was down, new aircraft transactions went down, but from a dollar value standpoint, we've seen an even bigger reduction in the market and the value of that market. From 2017 through to 2019, we saw a loss of $671 million in the market, but 2019 was propped up by 2 wide-body deliveries that took place, one from Boeing and one from Airbus. And those are kind of unusual. We don't see those very often. So if you even remove those two, you then see that the market has contracted for new aircraft deliveries by $1.3 billion. So again, almost half of what it was in 2017. And so that is a massive change in the value of our market here. Similarly, on the pre-owned side, we're seeing a deduction as well. So again, here we're seeing it being reduced from 178 transactions down to 120 transactions and seeing a loss in value of $885 million. So I used to be able to tell people that the market size out here was $5 billion plus. It's now contracted down to where it's just a $3 billion market if you look at the new and the pre-owned. For the pre-owns as well, you've got domestic transactions, ones that happen within the APAC region, and then ones that go in and out of APAC. Looking at the numbers, not one of those transactions types was worse than the others. The percentages are the same pretty much as we've seen in other years, so the losses when it comes to the dollar value are even across all different segments or all different types of transactions. No real big change there. But again, another big story of the year is this deduction in the value of our business here in the Asia-Pacific region, which was $5 billion, is now a $3 billion business. The fleet report also delves into aircraft registration. This is another interesting market. It had been dominated in the past by mainland China B registrations and US N registrations. But again, those two registrations are losing market share, and where we see the real growth, and maybe not too surprisingly, is in the offshore registrations. And here the story is really about two registrations specifically: Cayman, which has 50% market share, and also San Marino, which is, if you will, climbing up the table rapidly fast. Cayman experienced growth through 2019, but again, San Marino was by far the big winner through the year. And if you look at San Marino over the last 2 years, they've grown 380%. So when it comes to the offshore registry, Cayman and San Marino are really the ones to watch going forward. We look at operators in the fleet report, and this is always probably the most contentious category that's in the fleet report. It's always something that garners a lot of interest by all the readers. This year, number one was Sinojet, and as you'll see on the next slide, it was one of the fastest growing through the year as well. Number two being TAG. Lots of changes in the table, as you can see, people moving up, people moving down, and you can see also in the brackets there, people losing airplanes and some gaining airplanes. Probably another, if you will, honorable mention, Metrojet being one of the big winners as well, adding a +5 aircraft too. But if you will, Sinojet topping the table this year for the first time with 45 aircraft. And how did they get there? Well, they've been the fastest growing management company over the last 2 years. Since 2017, they've added 15 net aircraft to their fleet. And when you look at the top five and you look at how much they've changed over the last 2 years, you can see between them they've added a net 32 airplanes between Sinojet, Metrojet, Amber, Premier, and Phoenix Jet. Metrojet is again another interesting story. It had lost share, if you will, but gained that back this year, whereas the other ones that are in this category have all had consistent growth through the last 3 years. So that kind of wraps it up for the fleet report. And at this point in time, it's probably relevant to see where we are. As I said, for me, the surprises of the year for the fleet report were that we did eke out a small growth. It wasn't much, but it was positive, which was a bit of a surprise. And probably the other big surprise there being that growth came from unusual quarters, that being primarily Australia and Japan, and that the aircraft model types that were providing that growth were very, if you will, untraditional, if you will, unsexy, very light and light aircraft. So you had Lear 35s and 36s and Pilatus aircraft and so on. So again, big surprises of the year. And also the fact that the market was impacted so heavily, where we saw the value of the business drop from a $5 billion business down to a $3 billion business. So here we are, year-end 2019. The world at this point in time is looking forward. We've got a phase one trade deal coming up in January in a couple of weeks between the US and China. So finally a resolution to that trade dispute and positive signals. Again, financially, the markets have been strong all through the year, having risen 5,000 points. We're very close to what would eventually be its high of the year at 28,500. So again, the financial markets are looking good. Maybe some worrying signs on the horizon, or just points of interest at this point in time. Of course, President Trump had 2 articles of impeachment against him. And finally, the UK had sorted itself out regarding the EU and decided overwhelmingly to exit by the end of January. In Hong Kong, for us, we also continue to have the protests ongoing. So there was sort of a mixed blessing at the end of the year where things were on some sides looking positive, and on other sides there were maybe worrying signals. But on December 31st, as we all know now, things changed forever. On December 31st, China informed the World Health Organization of a coronavirus breakout in Wuhan. And this now provides a convenient sort of, if you will, slide into Asian Sky Quarterly for our 2020 first quarter issue. That issue now has become really an issue that deals with the COVID-19 coronavirus and trying to highlight its impact on the industry and also provide with you the usual market dynamics that we provide in Asian Sky Quarterly. A big part of Asian Sky Quarterly and every issue is a survey that we've done. This quarter's Asian Sky Quarterly is the 18th version. We've been doing it therefore for 3.5 years. So every issue has the market survey, and it's become a very, very important component of the publication and of the market as far as them trying to get a read on what's happening. That survey is, if you will, significant in that it garners a huge response rate from the Asia Pacific region of 580, almost 600 respondents. And not only that, it garners them from really all different facets of the business. So as far as getting an opinion on what's happening or what the feeling of the market is at this point in time, frankly, the rest of the surveys out there are a shadow of the survey that we do. Especially now, like I said, we're almost garnering every time 600 respondents. So with that, I think it's important then that you focus on the results because, if you will, they have a meaningful source. The big change also this year, this quarter, was that we included a number of specific questions regarding the coronavirus. We had our normal format, but we also added on top of that a number of questions regarding the coronavirus and to gauge the impact of that on our business. So one of the questions we obviously asked was, how much has the coronavirus impacted your business so far? And as you can see here, the answers were you seriously affected it or not affected it or somewhat affected it, or it's hard to tell at the moment. And you can see here that 90% of the organizations said that the coronavirus at this point in time had impacted their business either seriously or somewhat. And when you break that down, you can see again that the impact has been across the board. Nobody has been spared between operators, owners, charter brokers, or any other business related to business aviation, FBOs, MROs. They've all been seriously or somewhat affected. No one has been escaped the impact of this coronavirus. There is some regionality to it at this point in time. Certainly the virus was first experienced in China, so it's not too surprising to find that over 95% of the respondents from Greater China all said that they were being impacted by the coronavirus, whereas some other regions hadn't reached that same level yet. And probably another very interesting thing to note is that, as we all know, every day we wake up and we look at the news, it changes every day. So there is a time element to the responses. And we have a slide here that touches on that, where in particular, when you look at Greater China, you can see even through just March, you can see that as time marched on, people's opinions and people's feelings about how much they were being impacted by the virus changed. You know, China now at the end of March, beginning of April, you have basically 77% of them saying that I've been seriously affected, the other 23% saying I've been somewhat affected. It's now 100% in China, which, as far as respondents feeling they've been impacted by the virus. So again, always a shortfall of any survey. It is time sensitive, and certainly with the coronavirus, we see it as very sensitive. The next question related to, well, given you've been impacted, how do you feel about meeting your business goals or your business targets for 2020? And again, majority of the respondents said, no, I will not be able to meet those. And another 33% saying it's hard to tell at the moment. So certainly, again, optimism out there in the market as far as, you know, surviving the year is the small 25% versus the rest 75% feeling they've all been impacted, and as a result their business performance of the year will be impacted as well. The most optimistic are the operators still, that they still may be able to meet their business targets for the year, and the least optimistic being the owners. And again, that may be you know, the operators are only dealing with business challenges related to business aviation, where the owners, though, have got their businesses to be concerned about as well. So they have a bit of a different perspective on the impact of coronavirus maybe than the aircraft operators. Are we going to see a bounce back? Is this a short-term effect, or is it a long-term one? 40% of the market out there still thinks we'll see somewhat return back to normal or a new normal within this year, in the second half of this year. 25% think no. So we have still in place a huge swing vote of 36% on who just don't know at this point in time. And I guess as time goes forward and as we see daily the updates regarding the coronavirus, this 36% will be influenced on whether to swing into the no or into the yes. So the jury's still out on whether we have any kind of improvement in the second half of this year. Again, when you look at those that are most optimistic or pessimistic in regards to that second half of 2020 bounce back, again, the least optimistic are the owners and the most optimistic are the aircraft operators. And again, I think that's also somewhat colored by the fact that operators are still doing flying. They are still performing some flights. Again, a lot of those being humanitarian or other emergency-related flights. So maybe, like I said, their view on what's going to happen for the rest of the year is different from that of an owner. So these are all the questions regarding the coronavirus, and their responses and how people feel regarding those responses is obviously going to affect our normal survey questions that we have every issue of Asian Sky Quarterly. So for me, one of the most telling charts that we always have, and probably the one I always go to first, is this one, which looks at the level of optimism in the Asia-Pacific market and then breaks it down specifically by regions. It's always a fascinating chart for me because literally for every point on this chart, I could come up with a specific geopolitical or macroeconomic event that occurred that would be the result of these changes that we see in these curves. If we want to focus particularly on Greater China, for instance, going back to Q1 2018 was the start of the U.S.-China trade dispute. And not too surprisingly, optimism plunged at that point in time. And again, sort of from there on, as China and the U.S. moved back and forth between working something out and not working something out, that optimism swung back and forth as well until end of 2019, when we finally had optimism in growing optimism in the fact that we had a phase one deal. And that pretty much also colored the rest of the opinions within the Asia-Pacific region. There's a lot to be said about China. If China catches a cold, the rest of Asia starts sneezing too, that type of thing. So again, all the regions are very interdependent. So the fact that China was facing challenges, the rest of the region did as well. So, but again, as you can see from this chart, end of 2019, we're into the coronavirus period now, and optimism has literally fallen off the cliff, to where in Greater China we have recordings of the lowest level ever, and you can say that for all the other regions as well. Optimism levels are down to levels that we have never seen before. To the question of whether you're using your aircraft more or using your aircraft less, again, this is a direct reflection of optimism too. When business is good and you're feeling good about the future, you're flying your aircraft more. When you don't feel good about the future, you're flying the aircraft less. So again, here, not too surprisingly, we're seeing, if you will, after COVID-19 outbreak, we're seeing those that feel that their utilization is going to increase up by 20% or up by less than 20%, but still more, has dropped from 51% down to 33%. And likewise, those that feel my utilization is going to be less, down by 20% or down by 20% or more, that has increased from 29% to 54%. Now, this is a survey, so again, these are just people's opinions, but if we sort of move over to our partner WingX at this point in time, you'll see that actually those feelings are borne out in the hard numbers as well. Again, thanks to our partners at WingX, you can see that through January, February, March, the inbound and outbound aircraft or business jet flights from the Asia Pacific region dropped 30%. So huge swings in the amount of activity regarding business jets in the Asia Pacific region. And in regards to this, the flight activity levels, no major hub within the Asia Pacific regions was spared. As you can see in the chart here, Singapore, Tokyo, Beijing, Shanghai, Guangzhou, and even Hong Kong all experienced declines through the first quarter. Interesting note regarding Hong Kong, regarding the year-on-year growth, it was actually positive. And this is probably a result of initially during the early days of the coronavirus, certainly in China, a lot of the flights that were dealing with medical supplies, evacuations, and people moving and trying to get out from China, they all originated from the Hong Kong market. And so we probably had an abnormal higher level of flights originating from Hong Kong initially at the beginning of the quarter, that as more restrictions took hold through the first 3 months, we saw tail off and decline. But probably there was an original spike at the beginning as, given the virus was taking hold in China, people were crossing over into Hong Kong and getting and moving to where they thought at that time were safer jurisdictions than China. So that sort of tells you that there's real flight activity dropping happen. Another question that we ask all the respondents is how they feel regarding the market, specifically the pre-owned market. Is it a buyer's market? Is it a seller's market? With the decline in the, if you will, the economic fortunes, it's not too surprising for people to feel that it's becoming more and more a buyer's market. Buyer's market is sort of characteristic of more supply in the market, where therefore buyers can sort of demand the prices that they want. So that's certainly where people are feeling we're heading towards as far as the pre-owned market, and we'll touch on that later when we look at the market dynamics. And the other interesting curve to look at is also a growth in the I'm not sure. So more and more people are thinking we're trending towards a buyer's market, but at the same time, the number of people that are just unsure is increasing as well. Another question we ask in the survey is what the respondents' purchase intentions will be. As we saw on the previous slide, we asked them whether they think it's a buyer's market or a seller's market. Here we try to pin them down on whether you're going to buy an aircraft, and if you do buy an aircraft, whether it's going to be a new aircraft or it's going to be a pre-owned aircraft, or again, you're just not sure what you're going to do. Probably not too surprising given the times we're in. The not too sure component remains fairly steady at about 50%. But for me, the interesting note here being that the changes in the pre-owned curve at the bottom. So basically this indicating in when the market returns and we hopefully get that bounce back to previous conditions, it's probably most likely that people will step back into a pre-owned aircraft versus a new aircraft. And there's probably a lot of good reasons for that. One being availability, one being that when people coming out of the current, if you will, challenging economic times, maybe they're not going to be in that mood to splash out on a brand new aircraft. They still need one, so a pre-owned aircraft is going to be very attractive to them at that point in time. It'll be interesting to monitor these curves as we go ahead to see if those numbers change even more over the subsequent quarters. That purchase intention also leads us to understanding a little bit more the various regions and their preferences towards aircraft. Probably not too surprising and very stereotypical to a certain extent. Central Asia and Middle East, they love their BBJs and their ACJs. Greater China has always been a large cabin, long-range market, so you'll see all these high percentages in these categories. Oceania, which is Australia and New Zealand, again, turboprops, driven by the domestic requirement and the rugged terrain and just the mission that's required in Oceania. Southeast Asia, North Asia, it's fairly evenly distributed through the different categories. which again for me just is probably more an indication that these are markets that have been in development longer, and so you're seeing a more balanced fleet requirement in these countries, and so when you look at the purchase intention, you're seeing that reflected as well. So that sort of ends the survey. Again, it's always very, very interesting for me to see those results and see how people are feeling. The other side of the coin, though, is it's great to match up those opinions with what actually we're seeing in the market and what's occurring. And this is the market dynamics section from the Asian Sky Quarterly, where we look at inventory values and we look at trends and we look at signal lines and we try to give you an impression or an assessment of where the market is going and what is happening in the market right at this point in time. This chart here is of inventory value. So this is the number of aircraft for sale times the asking price. It's a very traditional measure of what's happening in the market as far as supply. And as you can see, this chart starts from all the way back in January 2015 up till January 2020. So we've got a 5-year span here. And so again, you can see over time that oversupply in the market being burned off down through January 2017 all the way down through 2018, towards the end of 2019, and then with the market dynamics changing towards the end of the year. That is highlighted a little bit more when you look at some more specific dynamics, and this one being the percent of the aircraft fleet for sale. And here we break it out to look at the worldwide fleet, and then we break it out to look at the Asia-Pacific fleet in particular. So that mentioned previous slide about the oversupply, you can see the amount of the fleet for sale peaking again in the July, early 2017 timeframe, but over time that oversupply being burned off to where towards the end of 2018, January 2019, and through the first 6 months of 2019, really starting to hit the bottom as far as the market and the supply of aircraft in the market. An interesting point for me, or an interesting observation, is there used to be a big gap between the Asia Pacific and the worldwide fleets as far as the percentage of the fleet for sale. I think this is a bit of a reflection where you have to look at the economics that were impacting the two regions during this period. The U.S. economy has been very strong for many quarters now, whereas the Asia-Pacific region, maybe not so as much, and certainly I think you see that reflected in that more aircraft being for sale. I think also the Asia-Pacific market is a more immature market, and therefore you tend to see maybe more spur-of-the-moment sales activity going on as well, where maybe individuals that are unfamiliar with the market and the dynamics are putting their aircraft up for sale when maybe it would have been a better idea to hold on to that aircraft for longer. But it has all normalized out now to where 2019, 2020, the percentages are very much the same. As we saw on the previous slide, the percent for sale is going up. Well, basic economics say, well, more supply means prices are coming down. And so no surprise here that we see in the chart that the asking prices have turned down. And again, that's being driven by the fact that there's more supply in the market. The difference here between the curves is the Asia-Pacific fleet is very much dominated by long-range, large cabin airplanes. So it's not unusual for us to see a big spread between the two asking prices, given that the worldwide market has a lot more mid-size, light, super light aircraft in the fleet versus the Asia-Pacific region. By dollar amount, the aircraft in the Asia-Pacific region are just of higher value per unit. We're also seeing the average days on market coming down. I think we'll see that change as we go forward to the next couple of quarters. Obviously, demand and whether there is any demand is yet to be determined. Again, we're at the end of the first quarter 2020 at this point in time. So going forward, whether or not transactions are still being able to take place and people that want to buy airplanes are able to buy airplanes is another story. So I think what we'll see as we look forward from here is that certainly the number of days on market will turn up as well, as more and more aircraft sit while everyone takes a wait-and-see attitude to see what's happening in the market before making that final decision to either move ahead with a sale or an acquisition. And this chart tries to give the reader some sense of where the market is going. The previous charts were all a summary of what's happening today or what has happened in the past. This chart tries to, as best possible, give the reader and our clients some assessment of where the market is going. So you saw previously we had our inventory, which was a measure of number of aircraft for sale times the asking price. This is the dark blue line, measures the rate of change in that inventory value, and that's over a 12 6-month period. The dotted red line here is what we call a signal line, and it measures the rate of change in the trend line. So again, over a 91-day period, it then measures the changes in the trend line. So between the two of them, we hopefully get an indication of where the market's going, but also where it is most likely, or that signal line is telling us, is where it's going to go. And maybe it's not a great analogy, but I tend to look at this as, you know, the market is a super tanker. It's a container ship, and it has a certain momentum, and that momentum is carrying it in a certain direction, and that certain direction that it's going is the trend line. But there are all kinds of, if you will, impacts on that supertanker through the next 90, 60 days that are small, but nevertheless potentially change the direction of that supertanker. As we all know, it takes a long time to change the momentum of the market, but over time we do get these signals that indicate that 91 days from now it's going to be at a different place than it was today. So looking at this curve, you can see that we had been heading into a buyer's market for quite some time now. Focus on the January 2020, what we call trend change. So indications were at that point in time, if you see where we were in the market, that most of the oversupply had been burned off, and we were seeing the asking prices therefore turn up, and if you will, the market somewhat heading back towards a seller's market. But what the signal line tells us is that don't be fooled by that, if you will, because the signal line is telling us even though the market momentum may be towards returning to that seller's market, the signal line is actually telling us, well, it's heading actually long-term over the next 91 plus days, heading back towards a buyer's market. And we're also seeing that in the other numbers that we saw previously. So hopefully interesting information that gives you some insight on what's happening and allows you to make a better business decision over the next 3 months on what to do regarding the market. So in closing, the business jet fleet report, like I said, surprising results in the fact that it was positive. Some interesting developments as far as where the contributions came from, what regions and what aircraft types. Asian Sky Quarterly, obviously a huge impact to our industry regarding the coronavirus, and will continue to be impacting our business. Market trends are showing that the market is certainly changing, that we're moving into a buyer's market again. More supplies coming on the market, asking prices are coming down, but the jury's out on actually whether or not we'll be able to transact or not. So whether or not that demand is going to be able to be met is another story. Is it going to remain as pent-up demand? Nobody's quite sure. Looking at potential results for 2020, it's certainly, we didn't move into 2020 from strength. You know, we had a small percentage of growth. We eked it out a little bit at 0.9%, and the market saw a huge change in value. So again, we didn't move into 2020 even without coronavirus in strength, and then we got hit by the coronavirus. So certainly the outlook for 2020 is not great. It really was, as I said, is going to depend on the duration of the coronavirus and how long it impacts our industry, and whether or not it gives us time to recover in the last part of the year or not. But again, the year was always going to be tough from the beginning, and we had forecasted that we would have a contraction in the Asia-Pacific fleet anyways. So expectations could be that it'll be even worse coming the end of the year.